All right, good morning, everyone. It is 8:52 in the morning of December 8th, 2022, and this is my pre-market strategy session. And so today, it's looking to me like things are overbought in the pre-market. Very short term, though. This is on a 1 minute and 10 minute basis. So here you see the RSI popped up above the overbought signal and then dropped back down again. On the 1 minute, it did the same thing here. So, with them coming out of overbought in conjunction with the VIX, well, the VIX didn't quite make it to oversold there, and it didn't there either. It touched it actually. It went just below, just slightly into oversold there. So all four of those aren't lining up, actually. I thought they were when I first glanced at them. So usually when the indicators are sort of discombobulated, it's usually bullish. At the open, there will probably be a little bit of a sell-off of this pre-market rally. This pre-market rallies happen on really low volume. Like for example, this. Let me pull up this 10-minute. This bar right here, it went from 281.85 to 282.51. Yeah, it was only on 15,000 shares of volume. So, kind of if the trend is bearish, and so the correct way to trade is in congruence with the trend. I'm willing to line up either way though. If my indicators line up for a bullish trade, I'll take it, and if they line up for a bearish trade, I'll take it. We're stacking up. The market is stacking up for some rather tumultuous times, and that it can include the upside and the downside. And if you tune into this channel regularly, or you've watched this, you've probably seen me look at the 10-year, 2-year spread. I do it just about every day. And here we are making new, as far back as this chart goes, which it goes back to February of 1988, then it's according to that historic basis, then we're making new all-time lows on the 10-year, 2-year spread. We haven't seen the 10-year, 2-year go this low since at least 1988, and probably quite an extended period of time before that too. I don't know about 1929 or 1937, so on and so on. I don't know what the spreads were for back then. This morning when I came in, it was down at negative 899 basis points. And what's strange is, for example, on the monthly, you see it doesn't show it go down that far. But then here, and even on the 10, it doesn't show in the 10-minute chart. It shows a big gap between where I walked in on it this morning, and here it was back here at this morning. It was this morning I came in. I think it was like 6 o'clock this morning. Well, anyway, it went down as low last night. It went down as low as 899 points to the downside. So the 10-year continues to come down. Now, this morning, the 10-year is coming up a bit. Here's the 10-year right here. The 10-year is up 2% since yesterday, which means there's some selling in the bond market. Usually selling in the bond market is one of two things: raising cash just to have cash, which is unusual, or it's going to roll into the equity markets. If I were to guess, the Christmas rally is about a week away. Oops. Let me go back over here. Let me go to the calendar here. And so, the Christmas rally will kick off somewhere, between Thursday the 15th and Monday the 19th. And we'll get that Christmas rally. And so This is a total shot in the dark. Is that perhaps there's some money rolling out of the safety trade and is willing to go into the risk on trade here as we go toward get closer to the Christmas rally. If the Qs open up right now, it would open up 0.6% higher than the previous day. And so we could end up with a bullish day on our hands. This level right in here, I have the gap marked off. However, this level right here, where is it? Right there at roughly 280 appears to be somewhat of an important level here. See, we popped through it here on Thursday, came down, kind of tested it. Let's see, the low on the 11th, after that pop up, after that gap up and a move up, the low on the 11th of November was 281.19. And so then here on the 17th of November, the market opened up at that level and was bought up. And then here again on Tuesday the 22nd, opened up above the 280 mark, went as low as 280.46, and then caught a bid again. Now here on the 29th of Tuesday, it closed at 280.57. You can see it kind of went down below that area. And the next day, in that same price zone, pardon me, this was when Powell put out a statement about starting to be less hawkish on interest rate hikes, which he won't be. But the thought is that he'll start hiking at either 25 or 50 basis points instead of 75. And market took that as, less hawkish means more bullish. The market went pretty much nuts that day and ran. The bulls ran, and then popped up here to around 295, 296, and then yesterday, or the day before yesterday, got to that 280 zone again and closed back above it. Now yesterday, it closed at 280.53. Wow, and on November the 29th, it closed at 280.57. So there's this level that's roughly 280-ish plus, 280-ish and some change, where people are coming back in and buying. So here we are at the bottom. Today I guess will be a telling day. I mean, if we rally up from here today, then actually that was yesterday, the 7th. It closed at 280.53 again. So right now we're at 282.13. It's, who knows? Nobody ever. I mean, there are some times where you can have like a high degree of confidence in which way things are going to go. Today's not one of those days for me. Not unless we start getting down below 276. If we start creeping down below 276, I think we'll see a short-term thrust through 276, and then maybe close above it. I don't know. We'll see. But the bottom of this gap is at 267.76, and I'd really rather see the market, the Qs at least, come through and test this 267.76, and then move away for a Christmas rally. That would put upside to somewhere around 300 from 267.76, and that's a trade that I could get into for a week or so during the Christmas rally. That's pretty much all that's going on. I mean, other than the VIX looks like it's trying to bottom out again. So back here on the 12th of August, the VIX put this low in of 1912. And then back here on the 2nd of December, it actually broke down into new lows at 18.95. So is the VIX showing signs of a short-term slump? Yeah, it's possible. I'd still give it like about a week or so, but if it starts breaking down below this 1912 and during the Christmas rally, it's going to be risk on big time. We'll see some pretty decent up days in that time period. So today I don't really know what to make of today, other than I'm just going to use the same old. 1 minute, 10-minute RSI on both the Qs and the VIX. And once they're all aligned up, the VIX, is supposed it's coming out of overbought. Oh, I'm sorry, it's coming out of oversold, and the Qs are coming out of overbought. Then it's a short trade. If the VIX starts coming out of overbought and the Qs start coming out of oversold on the 1 minute and the 10-minute, then it's a buy. It's a long trade. So pre-market here, you can see it's flirting with overbought conditions, though. So we could see maybe the first half hour, first 10 minutes to half hour of the day, to the downside, and then move up for the rest of the day or something like that. It's really today's a really tough day to be able to forecast. I probably won't trade, and it'll probably be into next week when I finally start to take some trades. All right, everybody, good luck out there. Keep your risk tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's strategy session. I am out.